The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning from the sunny Southwest. And we're out of the offices of 100 South Broad Street at Duke & Duke. We're now here in Tucson, Arizona. And we're going to take a look here at the DAX. As you can see from this daily chart, we have broken below the support line that we were looking at. And the only way to really see that clearly is if you would go to a 4-hour chart, and you'll be able to see it a lot easier, and you'll be able to see what's going in. Anyway, if you have any calls, please give me a call, 877-927-6648. I'll also be doing Tom O'Brien's show at 3 o'clock today, too. So both of those, we'll get both of those shows through. I wanted to share something with you that I found really interesting when I was doing the webinar the other night, and that was about tape reading. I just wanted to show you some of the ways that it works. This is something we were looking at yesterday, folks. I just wanted to reiterate how I learned some of this stuff because I think it's pretty interesting. I used to read Livermore's book all the time, Reminiscences of the Stock Operator, and one of the things he was big on in there was tape reading. Remember back in the days when I started trading, we had a tape from the CME and a tape from the Chicago Board of Trade that went into a big wicker basket, and then you compacted it. And we didn't have these fancy compactors, and that's what we did. So nowadays, it's real easy. So what I'm getting back to the story here is that he would read the tape, and as he read the tape, it would say 99 3/4, 99 1/2, 99 7/8, and he was waiting for a breakout above 100 in order to buy it. And of course, he gets impatient and he buys it at 99 3/4, and that's the top, and it drops down to 76 because he didn't follow his plan. But tape reading can really be helpful, especially if you're waiting for an entry. And what I'd like to do is to share with you what we were looking at in the Canadian dollar yesterday. As you can see that chart that I posted, that it was getting down to this 129.60 level. And that's the main thing that we're looking at. Now, if we go to the next one here, I just wanted to show you what happened because we went down last night. This was just a little while ago, but we've since gone below the last year's lows by 3 pips and have already rallied 25 pips. Oh, we've got a caller this morning. Let's not forget our friends. Okay, from Vail. Oh, you're in the low rent district, Vail, Colorado. Matt, how are you?
Hi, Larry. How you doing?
I'm very good. What can I help you with, my friend?
Oh, I was wondering if you'd take a look at the 30-year bond and crude oil.
You betcha. Well, the crude oil, just one second here, if I can get these up here. I'm pretty sure I'm ready for both of those questions. The 30-year bond, let me get this one up here to take a look at it because I'm going to do it with the notes, Matt, because it's easier for me to do it quickly this morning. Later on, during the break, what I'll do is I'll post the bond chart and let you folks look at it. But you'll notice the tip-off to this was the fact that the 20-year note was so weak compared to, or 10 to 20-year notes were so weak compared to the 30-year bond. So the 30-year bond was the fake out, and now we've broken down. There is really strong support at, I believe it's 153.05 in the September bonds. That's a 61% retracement of the middle of the month last month. So I would watch that one really closely. But long term, these look like a lot of trouble, Matt. That's my opinion.
Yeah. No,
Well,
I agree. It's funny. It kind of stopped right at the that June 1st breakout area. So we've kind of come back a month already in short order.
It doesn't take very long. Once it starts, it just goes very, very quickly because markets drop faster than they go up because fear is a greater emotion than greed. And they could think, the greed is, what am I going to buy next? What am I going to buy next? When fear is, oh my God, goodbye house, goodbye car, goodbye boat, goodbye wife. I mean, that's why fear is so dangerous, and the markets drop so quickly on the short side. And professionals, they actually prefer that side of the market because it's so quick.
Yep.
And regarding the crude oil, I think crude oil has made a pretty good bottom in here. And the $64 question is whether we're going to be able to rally much out of this level. We really need it to get above the 46.50 level, because then if we can get it above that per barrel in August contract, then that would be indicative of a breakout, and we would be 10% off the bottom. That would be another reason that I would think that's what I'm looking at.
Absolutely, yeah. It's kind of stuck under the early June lows here, and the $1 million question: do we break back above that into that area you're talking about, or does it give it up from here? So that's your guess is as good as mine.
Yeah, this is a good guess. This is our first ABCD correction from the bottom, and we bought it down near that bottom because there was a lot of numbers there at $43 a barrel. And now it's rallied a little bit, but hasn't rallied much. So we're 2 or 3 days into this rally, and it's really going nowhere. I mean, that's 5 minutes from now it could be $49 a barrel, but right now it's taking its time, getting moving.
Yeah.
Okay, and if you look at the heating oil, if you also look at the gasoline futures, they're telling you pretty much the same thing. This is a bottom, but how much of a bottom it is, we just have to give it a little bit of time.
Absolutely. Things are changing in this world in terms of oil. That's for sure.
Yeah. Hey, listen, thanks for calling in. You do live in paradise up there. That's really a beautiful part of the world.
Well, thanks a lot. Tell Sarah hi and come visit one of these days.
I will. She's right here. I'll tell her. Thanks a lot, Matt. We'll talk to you soon.
Take care. All right. Bye-bye.
Okay. All right, here we're on a Friday, folks. I wanted to do a couple of quick things here, but we'll finish this up before the break. This is the Dow Jones Industrial Average with the, hold on one second here, if I can get this up here, with the Bradley model. And as you can see, yesterday was a very major support down there, and I believe that's probably going to hold at least through today. This is just my guess. At least through today for several reasons. One, it's the end of the month. There's going to be a little bit of window dressing. It's going to probably be to the upside because we're still in an up week. And we're not in an up week, but we're certainly in an up month. So my guess it'll be relatively quiet. And then, of course, Monday will be super quiet because it's only a partial day. And, of course, we have the holiday which would be Tuesday. And, of course, the rest of the markets around the world are open, especially foreign exchange. So there'll be some action when we come in Wednesday for sure. That's the main thing. And then, of course, on Thursday, we're going to have Norm Winsky as our guest. And that's what we'll be watching, later next week. So we've got a break coming up here in a few seconds, I guess, and then we'll see what's going to happen with some of these. That's correct. The odds of the market being up the day before a holiday is about 75%. And the strongest of those days, of course, is day before Thanksgiving.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, looks like we're going to be opening slightly higher in the stock market today, I think. That's what the opening call is. I wanted to share a chart with you. This is something related to fundamentals, and I don't do fundamentals at all, but the fundamentals are sometimes related to the charts. So this is a chart that someone sent us about how the earnings are going. And as you can see, since March, the earnings have actually turned down a little bit. So we'll see what's going on. Hey, we've got another guest on the line today. Boy, this is favorite city today. Thank God it's Friday. John, are you there? How you doing?
TGIF, Larry. Good day to you, and good upcoming weekend to you and Sarah.
Thank you.
Larry, I wanted to ask if you could assess one or two of your weekly charts on the wheat contracts. Larry, what I'd like to do is compare notes.
Sure.
Specifically, wheat. Well, wheat is rallying. We know that.
Yes.
Wheat is being led by a just not a blow off, but a dramatic rally in price increase in the Minneapolis wheat futures. That's the hard red spring wheat that is best for milling, making into bread flour, grown up in Montana, North and South Dakota. And there's a true crop failure going on up there right now. And as a consequence, price is being bid up dramatically. And the Kansas City and the Chicago wheat futures are also rallying, but they're lagging a bit. So what I've done is I've posted into the Tiger's Den the weekly charts on all three. And, Larry, when I look at wheat, now that it's been in a 5-year bear market, bottomed out last year and is now rallying, I use, just for targeting purposes, I always start with the most simplest of ideas. For example, if wheat rallies and surpasses a swing point, I just look at the next higher previous swing point as a level to potentially target. And so I can come up with some simple targets, say on the Chicago and the Kansas City weeks, getting over the $5 range right now, conceivably going up as high as 6 to reach a swing point high of 2015. And, of course, Minneapolis already done that. So that's my view. I wanted to see, when you do your chart work with your Pesavento patterns, what numbers you might come up with so we can compare notes.
Well, I think you're spot on as far as the wheat. You know, we had some really strong resistance at that 508, 509 level in December wheat, where we had the perfect head and shoulders pattern. It backed off 20 cents a bushel, and you know, now has just turned around and broken out to the upside. So that's telling you this market wants to go higher, and I think $1 a bushel could be in the cards easily on this. It's certainly got the price points up there to point towards those levels.
Okay, I appreciate that. And I just make note, when you spoke with Rich Anderson, either that was Monday or Tuesday, he was describing how severe the crop failure is up in that neck of the woods. So it's clearly a bull market for solid underlying reasons. So.
You know, John, I wanted to thank you for telling everybody in the den about this. Just as it was happening in Minneapolis wheat, you alerted us several times of the fact that the strength was, you know, something that you must pay attention to. And it's went over, I think, $1.50 a bushel since you talked about it, hasn't it?
Yeah, it bottomed out. I was looking at, I do confess, I bought it incredibly well. I bought it well. There was a beautiful ABCD pattern down into support in the March-April timeframe on that Minneapolis. And as a trader, Larry, frankly, my greatest weakness, it's never the buys or the sells into resistance. It's getting out of a bull or a bear market too early. That is the case with Minneapolis. I booked gains $1 a bushel lower, and now just watch a Minneapolis scream higher. So, just to round out the actual prices, we rallied from 5.25 back in April, and we're at 7.50 today. So, you know, it's up.
Wow, it's $2 a bushel.
50, yeah, almost 50% in those 3 months, right?
Yeah. John, I got an interesting thing that you might be interested about, an interesting thing you might be interested about if you're interested about it. Anyway, when I first met Amos Hostetter, we had these old, they had a Quotron machine that gave you prices, but you couldn't get any charts or anything like that. And on that little machine, he had a little sign there, a little plastic sign, and it said, "Has anything changed to make you change your position?" And the answer was yes or no. And the second one was, has it reached your profit objective, yes or no? And then right underneath it says, if you can answer yes to both of those questions, you can exit. If not, go back to work.
I love that. Yeah,
so he had the same problem we all do. So there's nothing to be ashamed of. But that's what he did, and it was really quite funny. But he was really a nice fellow too. He'd just share anything with you. So just like you do, John, you give the folks in the den a great deal of confidence, and you do a great job too. So keep up the good work. Oh, John, I have a question for you since I've got you on the line here. We talked about seasonals before with some of the markets. Who do you use for your seasonal work?
Steve Moore at Moore Research Center out there in
Oregon. Yeah, sure. Yeah, he's the best.
Yeah, I mean he's got the most extensive database for that data. He's been doing it for 30 years or more, to my knowledge. So there's nobody who's as disciplined a student with as deep a historical record as he. So that's the source I use. Yes, absolutely.
You know, if you've ever been to his office, he's got behind the desk there, he's got a big registration there that his family bought this land in Oregon, and they bought it from, Ulysses S. Grant, the president.
Wow.
So,
wow.
yeah, it's really just having his autograph, is on that piece of paper was worth a lot, but that's behind his desk there.
Great.
So, hey, listen, thanks for calling in, my friend, and have a wonderful holiday, and hopefully I'll see you sometime this fall if we get to Philly. Where are you now? You're back in Chicago somewhere?
In Chicago and the Northwoods of Wisconsin now, and then Philadelphia in a couple of weeks. So, yeah, we'll look forward to it, Larry. Thanks again.
Thanks for calling in. You bet.
Great.
That was Mr. Z from the room, who always does a fabulous job. Let's see. We're going to be opening here pretty soon. Looks like we're going to have a little bit of a bounce early, and then we'll see if it's going to have any of those effects going on here. Let's look around. What else we got here going on with nothing? Oh, the gold is held. We took out yesterday's low in the gold by just a hair. We want to cover that when we get back from our break here, but we want to watch it very, very closely. Let's just get around the old pond here and get the gold up, so when we come back we can discuss it, and we'll see where we are. Hold on 1 second here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're having a nice little rally moving around in the market today. I don't know how much it's going to continue, but we'll watch it very, very closely here. One of the things that we want to keep an eye on here is this gold. As you see the chart that I've posted in here, you'll be interesting to notice that the thing was actually very, very close to a 786 retracement this morning. We took out yesterday's low by $0.50, which was 12.39. That was one of those things that we discussed earlier today, which is about the how you read tapes and to see how the volume. And the reason why that's important is that if you're looking at something and you keep seeing the trades come across at the same price, same price, same price, same price, that means the buyers and sellers are coming together there, and that's why I think it's very important to to keep an eye on that. That's just stuff that I learned from John Hill and reading the book Reminiscences of a Stock Operator by Edwin Lefevre. All of those were, very, very helpful in doing, learning to put this trading stuff, together so that you don't have to risk very much. That's the main thing. Okay, we've got a pretty nice move happening now in the. Let's take a look at this. Where are we at here? In the stocks, they've had a pretty good rally this morning. We got the Dow up looks like at about 70 or 80. NASDAQ's up about 20. S&P's up about 6. So that's normal after a big drop. Of course, we have a positive day today just because of the fact that we have the situation where the market is what am I trying to say? Right at the level where it has some support and resistance, in addition to the fact that we have a holiday type atmosphere, and that's as most important as just about anything that you could possibly ask for, because those are the ones that make you realize that you're in an area where these markets don't operate all over the world like we think they do. We think we're the capital of the world for financial markets, and you look at places like, China, and you look at places like Hong Kong and London. They do their share too, folks. So keep in mind it's very important. I don't know if you folks know this, but if you look at the top 10 banks in the world, 5 of them are Chinese. I mean, and I think we're in the top 15, I believe. I think we have J.P. Morgan in there someplace along the line. But just realize there's other places around the world that do this kind of stuff. So watch it because it's fun. That's why this business is so much fun, folks. You can literally, you're literally watching what the news is doing overnight, and you can see the big changes that occur, and why things occur and how money moves when things occur. So that's why this has been such a fun business to be in over the years, especially in some of these massive moves that we've had, like the crude oil going from 120 down to 26, and stocks going from 1,000 35 years ago up to 21,000 and change so far. So those are the fun things that's happened through the years. Let's get back to this gold chart for just a second. I want to show you the importance of this. I ramble on here a little bit. I've got a little bit of a summer cold. Okay, you'll notice that we've hit this level of 1242, 1239. We took out yesterday's low by a penny, half a buck. If we go below the 1239, folks, this is going to set up this ABCD structure that'll take us down to probably the 1219. So if we get to 1238, 1237 today, I would be willing to say that it's going to go down to this level of the ABCD structure. And it's a really good one because you had a perfect 382 retracement, and it took, 4 days to do it. That's a sign of very, very strong weakness up there at that 1260 level. And that's why we're looking for prices to go lower. We're seeing deflation in a lot of places with the exception of wheat. And soybeans and corn have been hit pretty bad, but wheat has held up extremely well, especially yesterday with the move. Minneapolis wheat went crazy, and of course December, played catch up, and so that was interesting. Oh, we got a caller from, one of our favorite people is in there, Mr. Heating Oil himself, Marshall. How you doing?
I'm doing good, Larry. How are you today?
I am doing okay. Got a little bit of a summer cold, but I'm hanging in there pretty good. What can I do for you, my friend?
Yeah, I heard the nasal. By the way, first, before I say anything, I just want to say enjoyed your webinar. It was great.
Oh, thank you. I can hear the sound of one hand clapping now. Go ahead, buddy. What's
mine.
up?
It's kind of a sort of a backward question here. You're trading heat, or you were trading heating oil. Why do you trade the heating oil? I'm sorry, the crude oil rather than the heating oil? Because isn't heating oil a little stronger actually?
Yes, it is, and the problem is that when you get to be old like me, Marshall, you have biases, and you become complacent in what you like to do, and you're comfortable with something, and that's why I trade heating oil, crude oil. I trade heating oil occasionally, but this time heating oil was the strongest, and I should have probably done that, but I still did okay, so I'm not.
I understand that, but I was just kind of wondering, shouldn't you actually, in a perfect world, you should pick the strongest when you think it's bull, and the weakest.
That's a fabulous advice. I've heard it in so many of those books that I read, but you always want to buy the strongest and sell the weakest. And that way, another reason, let's say you're on margin call and you have 4 positions, get out of the positions that are hurting you. Keep the ones that are helping you and get out. If they're all hurting you, get out of everything. But get out of the ones that are hurting you, and you should be okay.
Okay. All righty. Well, I just wanted to check up on that, and I wish you and Sarah a nice weekend. And I guess you must be freezing down there now. It's cooling off, huh?
Oh, are you kidding me? It barely got to 100 yesterday. I had to wear a jacket most of the day.
Yeah,
anyway, yeah. Hey, listen, tell Lynn I said hello too, and I hope to see you again maybe this next fall when you come by.
Okay, probably will. All right.
All right,
Bye.
thank you. Okay, folks, we'll get back to these markets here in a little bit. We're still jumping around quite a bit early this morning here. Let's take a quick peek, see if the gold is holding up. The gold is holding up, but boy, it's not bouncing very much. So we got to keep a really close eye on that one for sure. Another one, remember we had that big ABCD in the crude oil at the 54. It made a higher high than yesterday by 10 cents. So keep an eye on the crude oil. That's going to be an interesting one to look at this morning. And the S&P and the NASDAQ and the Dow Jones, I think they're going to be flat today, if flat to downward bias is the way I would look at it, because the Bradley model says that it wants to come down into next Friday. So that's the short-term version, but it's been pretty good. So that's what I'd have to think is on the agenda for that. But again, these things can change in a matter of a heartbeat. So there should be some pretty stiff resistance at 57.10 in the NASDAQ and at 24.35 in the E-mini S&P. That's the way it looks like from the cheap seats here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I wanted to talk a little bit about this chart that I posted, which is Minneapolis wheat that we were talking about with Mr. Z from Philly. And you can see this thing really exploded. It was a weather market. It pulled along our December wheat futures, but frankly, like John mentioned, this wheat future has a real chance for something major based on Chicago wheat. So we got to watch it very, very closely. Now, also, I have to make a comment. Yesterday, I was joking in the room when I said that the crash would happen on October the 17th at 10:30 in the morning. I hope you realize that that's what I was doing. However, some people literally took me at my word, and I certainly didn't mean it that way at all. But that was just a comment based on chatting in the room and stuff like that. So that's really what we're keeping an eye on here for sure. Someone asked a question again about the gold. Folks, I don't know whether it's going to hold or not. We're still trading at we're trading at 1241.80 right now, and that old low was 1239.5. So there's a $3 difference. The good part about $3 to the low. But the good part of it was we took out yesterday's low, by $0.50, and there were no sell stops there. That was another, advantage of looking at, tape reading. Because, you get an idea if there's any buying and selling. Like if a market goes into new high ground and immediately reverses, there was no buying there at all. It was all selling waiting to happen. We saw this in cotton. If you remember about 2 or 3 weeks back, it went limit up 2 days in a row with declining open interest. And you can see where cotton went. It dropped 17 cents a pound. Very, very quickly. So that's just part of the tape reading thing, folks. There's nothing more than that. There's nothing exciting on the front to think that anything really different has happened. This is the long segment here. Okay, I wanted to show that, and then I also wanted to bring to your attention this dividend chart that I got into, but I didn't get to talk very much about it because we had a guest caller, which we love to have here at TFNN. You'll notice this is the aggregate dividend payments. You can see that overall, I guess they've been dropping. This was a chart that someone said is going to be the reason for the stock market to sell off. Folks, this is part of the problem that you have when you read fundamental stuff, because you don't know whether it's late or early or in the future, you don't know. But with this one, you can actually see what's happening. You can see, what's really happening with dividend payments. Whether that means anything or not, I don't know. But I can just look at the chart and tell you that something's not right with dividend payments. That's, the bottom line. It's basically if prices are strong, there's going to be more buyers, and if prices are short, there's going to be more sellers. That's pretty much that might be the same thing. Someone's saying the crash is going to be on October 9th. I respect your opinion, however wrong it may be. Hey, let's don't talk about a crash. The one thing I can tell you about a crash, if the high on the stock market was June 19th, like we heard from Mr. Bill Meridian, we heard that from Shane, we heard it from Norm Winsky, and we also heard it from Kevin Murphy, who does the work of Bill Ehrman, and that was one of the big charts that I posted earlier. I should put this up here and let you folks see it. It's rather small, but it's really a really terrific chart, and it basically shows, that there is something really big happening on June the 19th, and he relates it back to all the other highs and lows in the market by using the numbers of sacred geometry. That's why it's so very, very interesting, to watch this stuff. But we'll have Kevin on in a week or so, and we'll see how things turn out with that. But we'll watch it real closely for sure. Well, hold on one second here, and let me move this around. And I wanted to show you one other chart here before we get tied up in the thing, and that is the chart of the U.S. dollar index. I want to just give you an idea of where we are as into the ABCD structure of this. You can see we stayed right at the 61% retracement for 3 days, and then later this week we actually this is a weekly chart, so it stayed there for 3 weeks, and then the market broke down. Now, whether it's completing this big ABCD or not, we're not sure, but in 2016 you'll see that move in the red line was equal to the move that we're looking at now. Now, whether that is important or not, I don't know. You'd have to be able to find another smaller pattern going to a daily chart as opposed to a weekly to see if that's going to be it. Right now, there's nothing that even resembles this as a possible bottom. Just the fact that there's equal moves there, and once it went below 96.50, folks, it was flat out bearish. That's when the euro took out the 112.90 level and is now trading, at the 114 and change. So all of that tells you that you're looking at something, pretty dramatic here in the euro. But we have made the 78% retracement of last year's range in the euro, and there's also a couple of moves that are similar there. And we're seeing other things in the Canadian dollar that we just mentioned, and also in the British pound that say the U.S. dollar, might have legs here if it gets a little boost from some of these other currencies. But right now, there's no need to change. But over the weekend, everything could change. I don't think it's going to, but there's a possibility that that would be the case. So that's what we're watching here. Keep in mind here, folks, I wanted to share with you the notes and bonds again, because if we get a rally in notes and bonds, I believe that will be a selling rally. I mean, something has changed, folks. The atmosphere at the central banks, it seems on a broad scale across all countries, are moving towards higher interest rates. So this is a big thing. Pay close attention to it. But that's what's going on right now, and whether that's going to remain that way or not, we'll have to wait and see. But we got some strength coming in to the market so far this morning, so that's a pretty good thing if you're long. And if you're short, it's giving you an opportunity to put your prices on at a higher price. We've got the gold is still holding this level of 1242. The low this morning was 1239, so took out yesterday's low by 30 cents and didn't go anywhere. So there's if you're interested in the gold market, that's one thing you'd be watching. So those are just some of the things. As far as resistance, There's a little resistance in the NASDAQ at 58.90 area. We're trading at 56. Wow, 56.90. We're trading at 56.80 right now, and that's nothing more than the Fibonacci retracement, the move that we had not too long ago, which was 2 days ago. So keep an eye on that. But at 56.90, we're 56.84. We're going to be there in a heartbeat. So keep an eye on that. That'll be a very interesting one, to watch. Another one, we're going to have a break pretty soon, but the euro, the important thing on the euro is if it closes above the 114.80 level, the next stop would probably be 116, and that would be what would take you down to that level we're looking at in the U.S. dollar index at 450.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to take a look here at the Treasury bonds. As you can see, we made that butterfly bottom down there at the 146 level. We rallied 11 handles. We didn't quite make the 382. We missed it by about 20 pips, I believe. And now we've come down hard. As you can see, the last 4 days, we're coming into pretty good support. at the 153 level, but I would watch this for a small rally back to 156, and I would think about it very, very strongly about being a short candidate. And the reason why is from March to June, we couldn't even make a 382 retracement. That is not a sign of strength, folks. So watch this one very, very close. We're seeing the same things, of course, in the notes, but that's really what we're watching here. Okay, let's take a look here at one other one that we want to watch. And that is the NASDAQ. We've had a pretty good rally. Hold on one second. We'll get this up here so that we can take a look at it here. This is the move down as of yesterday. We rallied back today. We got to, we took out that overnight high at 56.86 and a half. Oh, no, we did. We took it out by half a dollar. And so the price objective on this measures down to 55. That's 110 points away. Whether it's going to get there or not, I don't know. And there's also a possibility that the other ABCD has made it interesting. But what's important about this, if you remember back in late May, the market was losing an open interest. And look what happened. You know, it took a while, but that's what happens when open interest leaves the market. There's just a vacuum under the market, and there's really nothing else that you can actually do. So watch it very, very closely, because it could be a real interesting move here in these Treasury bonds as interest rates, begin, to go higher. Stock has sold off a little bit right now. The only thing interesting is, so far, from a technical tape reading basis, we took out yesterday's high in crude oil and it went nowhere. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.